You mentioned kind of the probability of a soft landing. I know that last time we sat down about 6 months ago, back in February, you pegged the odds of a soft landing at about half of what the market was pricing in. The market was pricing in about 70 to 80% at the time. So by that math, you predicted about a 35 to 40% chance of a soft landing. Given what we've seen with the data, the jobs report last week and some of the other data in the last few days, do you still expect about a 35 to 40% chance of a soft landing, or do you think it's less than that?
Yeah, about the same. I mean, first of all, it's always good to look at the odds of what you think as opposed to like get set and say that's the one thing that's going to happen. And there's always a large range of outcomes, and we will all get through that. And so I'm fairly optimistic that we have a mild recession, even a harder one, will be okay. Of course, I'm very sympathetic to people who lose their jobs. You don't want a hard landing, and so. But there's a lot of uncertainty out there, and I've always pointed to geopolitics. I also think the deficits, the spending, the quantitative tightening, the elections, all these things cause some consternation in markets, and so we'll have to wait and see. Does inflation really get back to 2%? I'm a little bit of a skeptic on that too, and I don't look as much at the short-term data as about the things that are inflationary but are in the future: deficit spending, green economy, remilitarization of the world, and they haven't really happened yet, but they are going to happen, and they're not deflationary.
Given that prediction, I know that JP Morgan economists are expecting now a 50 basis point cut in September and November and 25 basis points thereafter. Do you think if the Fed were to do that, it would be a mistake given some potential enduring effects of inflation?
Yeah, I mean, I hate to say this, I don't think it matters as much as other people think. The rate effect itself isn't that critical. And obviously, psychologically, there'd be a lot of chatter about what does it mean? What are they thinking? If things getting bad. So, and maybe that psychological will affect the economy. But I also remind people every day, 325 million Americans go to work, go to their jobs, take care of their families, take care of their kids, build out their house, change a job. And it could be affected by the Fed changing rates by 50 basis points. I don't think so. So if they do it, I'm sure they have good reason to do it. And I'll rely on with their instincts. So I do expect they'll probably do it soon, but they've seen more negative data than they had expected. But it goes back to expectations. All the expectations have been wrong too. So just always keep that in the back of your mind.
If they were to cut by that magnitude, though, does that risk more of a stagflationary environment, which is something you've been warning about?
No, I mean, stagflation would be a recession with a little bit of inflation. Mm-hmm. So I think what they do in the short run may or may not directly affect that. Obviously, all things being equal, it reduces the chance or the depth of a recession, but I don't know if it affects really what might happen down the road in terms of stagflation.
First, I want to ask you, in the last couple of days, you did see for a moment there Bitcoin fall below that $50,000 level. I do understand that MicroStrategy acquired an additional 169 Bitcoin for just over $11 million in July. But when you see that dip below 50,000, do you dive right in, and to what degree?
We're always buying Bitcoin quarter by quarter by quarter. It's a long-term strategy. But the most important point for people to understand is that Bitcoin volatility is a feature. It's not a bug. The volatility creates tens of billions of dollars of credit and liquidity at all times, everywhere, to everyone in the world in the short term. But over the long term, that volatility is driving superior asset performance and durability. So it's volatile because it's functional. The other markets are all closed and they're crippled by the physics and the politics of the asset.
Isn't it a problem when a store of value, if someone wants to use Bitcoin as a store of value, can lose 10 or 20% over a couple of trading sessions?
The reason it moves is because it's functional. It's digital capital, and it's superior to physical capital or financial capital. Bitcoin's a capital investment you can hold for decades that a corporation, competitor, counterparty, or a country can't take away from you. So it'll create generational wealth for your family, your corporation, or your country. You can liquidate it at any amount, anytime, anywhere in the world, or you can hold it for any amount of time without active management or business acumen. So yeah, it's volatile, but it's so superior to every other option that you have for long-term capital management that I actually think the world is just waking up to discover this virtue.
Michael, I still feel the need to really understand the psychology of these pullbacks, because at some point it still matters the price you buy into Bitcoin at. How much are you willing to put to work when you see those dips? What types of dips do you look for when you put more money to work in it?
We look at Bitcoin as cyber Manhattan. So there's never a bad time to buy a scarce, desirable real estate in the greatest city in North America. There's never a bad time to buy Bitcoin. So we will just generally acquire it, whenever we have cash, whenever we can raise money in the capital markets, whenever we see the opportunity. I think timing the market is almost impossible for the mere mortal. It's time in the market that matters.
So you can think of us a little bit the way gold miners operate or oil producers operate. The cost of our commodity in the marketplace goes up and down, but our cost to produce is driven by other factors, right? Our cost to produce Bitcoin is driven by the cost of the energy and the global hash rate, which results in the difficulty rate of what we do. And so if Bitcoin price drops, it impacts our margin, doesn't impact our costs so much. If Bitcoin price goes up, then we earn more money, obviously, and our margin expands. So when you have this type of volatility, if you look backwards, you'll see that over any kind of period of 2 years or more, Bitcoin tends to revert to mean, like most trends do. You look at the S&P 500 index over 20 years, it goes up, it goes down, but it reverts to mean. And the same thing happens with Bitcoin. It's just that Bitcoin's price appreciation curve is a little steeper than the S&P 500s. And so we look at the long term. And the other event we have is this halving event that happens every 4 years. The most recent one happened in April. We were well prepared for that. And now we're very focused on continuing to grow our production base, grow our number of exahash in production, expand our business. And we're also very focused on diversifying our business. And this is where our business becomes more resilient than your pure play Bitcoin miner, right? We are mining Caspa in addition to Bitcoin. Why should we mine Caspa? Well, on a per kilowatt basis, we earn more mining Caspa than we do Bitcoin. It's not to say we're going to abandon mining Bitcoin. It simply means that we found other revenue streams that generate higher margins that allow us to subsidize our cost to mine Bitcoin, subsidize our SG&A costs, and even acquire Bitcoin in the marketplace, like we did a few weeks ago when we went in the market and bought $100 million of Bitcoin at the last dip. And so we are very opportunistic. We love to accumulate Bitcoin. We now have over 20,000 Bitcoin in our treasury and continue to grow it. And while we're not as big as MicroStrategy, obviously, we have the same underlying beliefs about Bitcoin as a strategic reserve asset for treasuries.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And make sure you go to that TikTok, like and follow, spread everywhere. And this channel, of course. Guys, spread it everywhere. And we've had a lot of entertainment so far this week. Now we have Jamie Dimon asked about the soft and the hard landing. I know a lot of people are like, what are they talking about? They're talking about the fourth industrial revolution. They're not going to tell you about it. And basically he went over it. He said there's going to be a lot of job loss. Yes, guys, we know why. Because they want to bring in the machines. This inflation is not going anywhere. That's the reason why stable coins, that's why it's called stable. Stable coins are going to take the place of the fiat that we have right now. And how they're going to get there? With the crisis. And he talked about the increase in the military. So he broke down the fourth industrial revolution right in front of you, but the sheep would never understand. All this is spoken in code. And remember, the Crypto Teacher told you. And we have Michael Saylor, the spokesperson for Bitcoin, is always speaking in code about the fourth industrial revolution. Always talking about cyberspace and digital money. He's talking about the digital economy that's moving fast forward, where the robots, algorithms, and drones take the economy over, pay each other with crypto, and the sheep go inside the metaverse. And we have Marathon Digital, the mining company, diversifying, which everybody should. We know all these fund managers like Warren Buffett. That's what they're known for. And Warren Buffett sells half his portfolio, which was Apple, because he's getting ready for the downturn to buy up everything. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. Y'all have a wonderful day.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Crypto Teacher and the new World Order book, plus the 3 kids books, It's Time to Re-Educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.